Edutrainment Workshops, the insurance industry's leading education and training platform, presents Life Insurance, the entry-level series, the products, the underwriting, and the planning applications to position your practice as the premier provider of insurance products in your community. Get on board, get on track, get to where you're going. And now, your Edutrainer, national insurance columnist, Steve Savant.
Well, welcome everyone. I'm Steve Savant, your Edutrainer and coach for our Edutrainment workshops and our entry-level introduction into life insurance. And all this week, of course, we're doing our introduction into indexed universal life. Probably the most popular universal life chassis on the market today. And what we want you to do is, remember, we want you to go out to our sponsor site, Lincoln Benefit Life, a subsidiary of Allstate, and go to their Eclipse illustration software at www.lblsales.com/ETW. When you come out to this site, you'll see Eclipse illustration software, you'll see Run Installer, you'll click on it and download their entire illustration proposal system. We think it's so user-friendly and it's easy to use. We're going to show you how to do that today with Index Universal Life, and you can go page by page with us. So before, if you said, hey, I haven't done that yet, you may want to stop the video just for a second, go out and download it so that you can go page by page, because we're going to be using it most of the show today and tomorrow. And also, what's really good about this is Lincoln Benefit Life and Allstate has also given us access to their proprietary information for prospecting and postcard kind of marketing campaigns. And these are all great pieces. If you say, boy, I don't know how to talk or communicate with my client, this would be an excellent way to go. And they have what in my thought was this Facts of Life booklet, which comes in book form or it comes in electronic attached email. It is excellent, great. It's really great for harvesting client information, and you'll really appreciate it, and it's absolutely free. So again, go ahead and get this, and remember, before moving forward, if you're FINRA licensed, you're going to have to, you can't use this until your broker-dealer okays it, and if you're with an insurance agency, the same. Also, a lot of people, I get mail all the time, Steve, I don't know if I'm at the right side of, or I'm at the right point of the teaching or the workshop. You really need to go back to the beginning. If you're just coming in now, you're way too soon. We really built some very foundational blocks and building blocks so that you could really understand where we are today. You say, boy, I need to do that. Just go out to our site, www.brokersalliance.com. When you come to our homepage, just go to that red button right there, On-Demand Videos, and you'll see all our Edutrainment workshops, and you get caught up, start from the beginning, and go all the way through and catch up, as well as, of course, our daily internet talk show, The Business Insurance Zone, and my weekend show, Welcome to the Weekend with Steve Savant. All that's out there on the On-Demand Video section. Now, today, we're going to be talking about illustrations, and this is why when I say you want to really have the software, because you'll be able to really go step by step with us. We're on using the Lincoln Benefit Ultra Index, and this software is excellent. Again, a great tutorial tool. Now, I'm going to start at the beginning, and if you've been walking with us, you've already done guaranteed universal life off this platform. You've done current company practice or current assumption UL off this platform. You've already done variable universal life. So if you've been tracking with us, you're probably saying, man, I'm getting this, Steve. This is really great. So here we are now on the index chassis. Now, I'm using some basic, and we're using indemnification scenario today, or death benefit, or coverage scenario. And so I've chosen my female. I just had this case, so I thought I'd throw it up here. I have a female, preferred elite, so she says, and we'll find out in underwriting, and age 45. And just a little side note on Lincoln Benefit, their Sherlock program is really excellent, and if you have clients that are really in good shape and have really been taking care of themselves, great diet, lifestyle credits galore, they're going to, especially female, you know, a pretty high percentage possibility of getting good underwriting. So in this case, we think she's going to be, after we did a pre-qualifying kind of a walkthrough of questions, we think she'll be preferred elite. And so what I've done is I put her birth date, she's 45, female, and we've chosen preferred elite. Again, if I had to do an actual indemnification and I had maybe something like heavy substandard ratings and so forth, I may not want to use indexing for that. GUL may be the better platform, the cheaper platform. Now, once I've assigned my gender and my date of birth, I'm looking at coverage. And in this case, I have a high exact need for about $1 million of coverage on this female 45 preferred elite. So I have 3 options, but 2 that I want to talk about. On this software, you could do option 1, which is level death benefit. You could do option 2, which is increasing death benefit. Now, I've chosen to do level death benefit. We're really doing this to get a little bit of accumulation, but we're not looking at this as an income stream or a supplemental income stream. So I've chosen specify the amount, option 1, or level death benefit, and I'm ready to move on to my premium page. And remember, all these pages are indexed here all the way through the proposal system, easy to understand, easy to get to. Now, in my case, I'm going to pay all years because I don't know when I'm going to stop or when my need's going to stop. And so I've said I'm going to solve to pay all these years. And because my client is more than likely preferred elite, I'm not going to shut this contract down anywhere soon before our wage 100. Who knows? A 45 and a Gen Xer at 45. Think about it. These gals may live into their hundreds. Right now, Willard Scott says happy birthday to Americans that are turning 100 every day. And if he took the time to say happy birthday to everybody that's turning 100, it would take him 365 days a week, about what, I think about 90 minutes a day. Because why? Because we're looking at people living longer. So I want to make sure that this contract is going to last well past 100 because I have a sneaky suspicion that's where we're heading for in human mortality. The life expectancy is just moving down the road, and I want that reflected in my illustration. So I want to search for all years, and I'm asked that I don't have any cash value. I'm looking at the bottom number, not a middle number. If I feel uncomfortable with that after doing a risk tolerance, I'll change that and maybe put some money in the cash value at the last year, which in this case would be age 120. Now, when I'm going down the line here, I'm not going to be looking at any riders. I'm not going to be adding any additional spouses or insured. I'm not going to go ahead and mess with the interest rate, although I can, but let's just visit it anyways though. It shows this right now that the fixed account is at 4.25%. The indexed account's at 8%, and if you were looking for the cap out rate, it's at 10%. I could go ahead and use any of those. I'm just going to use the standard procedure that Lincoln Benefit has embedded in their contract right now. And I also am going to pick up a few reports. I like the reports because it really shows me everything I'm looking for. And so in my illustration, I'm going to have the internal rate of return page, the cost index, although we don't hardly use it anymore. I still print it every once in a while just for the sake of showing another angle on is this economically viable. And I also always print the print expense report. Now, we just did a series on marketing to the fiduciary. If you want to play with the CPA community, the tax attorney and estate planning attorney community, enrolled agents of the IRS, or trust officers, you need to start getting probably conditioned and acclimated to using the internal rate of return on death benefit and cash value, as well as printing the expense report. They want to see it. You'll be one of the few agents or producers that are actually showing it, and that's what they want to see. And it's really an endearing part of getting in front of fiduciaries is showing the mechanics and how all these moving parts work and the cost for those parts. Also, I'm going to look at the basic ledger for a second before I go into the illustration. And I'm looking at the current. So for $1 million, I have a $4,081 premium, annual premium. And in that premium, this is under current company practice. If I wanted to find out what the guarantees were, if any, you'll notice that I'm in Index Universal Life land. So in that case, I would have to pay much more to get guarantees. In my view, I wouldn't do that. So when I look at this, I'm looking at the guarantees, I'm saying, well, I'm looking for current company practice performance. And that's why looking at the current. Now, one other thing about this, I want to show you the premium. The annual guideline is $4,081. Their safety net premium for whatever their first guarantees, we'll show you that in the illustration in a second, and it also shows their target premium, the actual compensation part of that premium. So now let's go ahead and tell the computer to go ahead and generate the actual proposal. We've plugged in our illustration input. Now we're looking for the contract to generate what is our proposal going to be. And I made this quite large so we can see it. And on the first page, again, it shows female 45 preferred elite. Second page is you're going to have some of the statements. When's the index investment date? When do they credit? What segment is going to that? What is index segment maturity date? All these things they explain in their caveats. Also, I like this, and look at this. What happens to my premium? This is what I like, and we're going to also show you the balance sheet on this as well. You make the premium payment. then they deduct a premium expense charge, whatever that is. Then the net premium is credited to the fixed account. The fixed account earns an interest rate that is no less than the minimum guaranteed rate. Then they take a percentage. The new premium allocation to the index will be transferred at the index account on the 15th of the month, and that'll be transferred, whatever piece of the pie they're using, that will go to the S&P. Then any gain will be transferred back into the account of the interest account, and you'll be able to see that's the mechanic. And sometimes I like showing this basic procedure, this basic steps, this chronology, and I think the client likes it. And this is another reason why I like using their software. Lincoln Benefit Life has laid this out. It's really easy to understand, and I think it's a pretty cool idea. Then it says, here, if you want to know how is it calculated, they take the S&P 500, they calculate by measuring the change in the S&P, and they look at the actual index investment date, the starting point, and 12 months later. Then they'll take their participation rate, let's say 100%, and then they'll be able to figure out what subject to their floors and caps, what that number is going to be. Again, a nice step-by-step description for your client. And I recommend that you actually read this first, go through it one time so you understand. And if you have any questions, not only call us here, of course, at Brokers Alliance, but you can always call Lincoln Benefit as well. They're always there. They're one of the best servicing carriers that I've ever seen. I've been doing business with these guys since 1990. And so it's really, their service is second to none, and I really appreciate how they always answer the phone and talk about these things and can walk us through it. Now, it also gives you kind of a, hey, let's see what this does with no crediting for all years. Even though that seems like an impossible scenario, I always like to show it, there's the worst scenario. Then I'll show a scenario like, well, based on the current interest rate market, maybe I'll credit 4%. And so then you can kind of look at that and see, is that a good deal? Or 8%. So they always give you the options to look at all these schedules, and these scenarios will help your client get an idea of what the cash could be or could not be. So I like that because it really helps, again, put some wheels on my wagon, some wheels on my thinking, and it actually walks us through this. Again, the definition pages are excellent because if you're not sure how to explain it, everything in here is defined in my view, very easy to understand language, not high-end, deep, advanced kind of nomenclature that are used for actuaries. And another issue I like is that it gives you a summary of all the years, so you can kind of give a snapshot summary before you get into the full illustration. So they're always already giving you their Cliff Note version of that. If you just want to kind of look at it real quick, score it out, look at the economic viability before you get into the actual illustration, which is here. So it shows the annual premium, $4,081. It shows we're not doing any distribution because in this case, we're doing an indemnification or coverage or protection scenario. It shows the policy values on the guaranteed side and then the death benefit on the guaranteed side. And I said a lot of goose eggs there because this is constructed to get this kind of return over on this side. That's why if you feel like you need to have guarantees, you should be looking at Guaranteed Universal Life. Now on this side here, I'm looking at my actual policy values less my surrender charge, and it shows my contract and my values all the way out at the rate that I'm showing. Now, the reason I want to come over to the expense side real quick is to show you the basic expense loads. And again, I think this endears you to the actual fiduciary market. I show my premium, the charges for my premium, my policy fee, my admin charge, my cost of insurance or my ART charges, and then I put my earnings on top of that. I've taken out all my expenses, I've added back in my earnings, and then I look at my end of the year policy values, and then do I have any surrender charges, which the answer is going to be of course, and then I want to see what my net numbers are going to be like, my end of the year surrender charges. When did the surrender charges in? So I'll know that when the cash value and the surrender charge column is the same. When we walk through basic expense loads like this and look at the internal rate of return on death benefit, we can measure, is this a good deal or a bad deal? The expense loads and the internal rate of return, again, are features that I always print out, and I find myself, especially in competition, one of the few independent marketing organizations that actually show the expense page as well as the internal rate of return page so that your client can understand exactly what they're getting.
This has been an Edutrainment Workshop, the educational division of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance. and sponsored by Lincoln Benefit Life, an Allstate company.